Hi all, today we will discuss the term management accounting. As we all know, the term management accounting is the branch of accounting. Here we discuss the managerial areas of accounting and shall we discuss the topic common size income statement. Common size income statement is mainly prepared to express the relationship of various incomes and expenses to net sales or revenue from operations. Here, we mainly consider the revenue from operation as the common base. So, it is always expressed as 100%. And in this term, here each item of cost and expenses and income are expressed as the percentage of revenue from operations. Okay. The main objectives of common size income statements are given below. The most important aim of preparing common size income statement is to analyze the relationship and changes of various item of income statement like expenses and income to its net sales or revenue from operations. And it is highly helpful for judging the operational efficiency of the organization. And with the help of common size income statement, we can understand the trend of different item of incomes and expenses. Okay, these are the main objectives of common size income statement. Shall we discuss a problem? Find out the solution for this problem. Prepare common size income statement of Hindustan Limited for the year ended 31st March 2019. I'll explain the question. Here, two columns are here, particulars and date 31st March 2019. Net sales 8 lakh, cost of goods sold 5 lakh, administrative expenses 60,000, non-operating income 2 lakh, office expenses 40,000, then interest paid 10,000, tax 20,000. Okay, this is a format for preparing common size income statement. There are three columns: particulars, amount, and percentage of revenue from operations. The first step is to give the net sales amount, that is 8 lakh, which is already given the question, and it is always expressed in 100% because we consider while preparing common size income statement, we consider the net sales or revenue from operations as the common base. So it is always expressed as 100%. Then less cost of goods sold 5 lakh. Then we will get the percentage, that is 62.5. We will get this percentage by dividing the cost of goods sold amount, that is 5 lakh, by the common base, that is net sales amount 8 lakh, into 100. Then we will get 62.5%. Okay, I'll repeat. Current year item, that is cost of goods sold. That item divided by common base, that means net sales, into 100. We use this formula for find out these percentages. Okay, then less cost of goods sold. We will write these amounts. Then by deducting the cost of goods sold from net sales, we will get gross profit, that is 3 lakh, and the percentage is 37.5, which is already that I already explained the formula, that is current item divided by common base into 100. So you will get the 37.5 percentage. Then less operating expenses. In this question, there are two operating expenses are given: administrative expenses and office expenses. Administrative expenses amount is 60,000. Then office expenses amount is 40,000. So by considering that formula, you will get the percentage, that is 7.5% and 5%. Okay. Then find out the total operating expenses. That means these two, we sum up the two expenses, and we will get 1 lakh, that is total operating expenses, and also you will find out this percentage too. Okay. Then find out the next step is to find out operating profit. We can find out the operating profit by deducting the total operating expenses from gross profit. Okay, then we will get the operating profit. That is 2 lakh, and also we will find out the percentages. Okay, then add non-operating income if any. Okay, in this question 2 lakh rupees is given as non-operating income, so add that amount and also find out the percentages too. Then we will get the total amount, that is 4 lakh, and the percentage is 50%. Then if you have any non-operating expenses like dividend paid, interest paid, these type of expenses are come under the category of non-operating expenses. So in this question non-operating expenses is given as interest paid, so we consider that amount, that is 10,000, and also find out their interest percentage too. Then we will deduct the non-operating expenses from the total. Then we will get the we'll get the profit before tax amount, that is 3,90,000, and also find out the percentages, that is 48.75%. Okay, then less income tax, which is already given in the question. Okay, so the amount is 20,000 and the corresponding percentage is 2.5%. Okay, then you will deduct the income tax from the profit. Okay, then you will get the profit after tax amount, that is final amount. Okay, that is 3,70,000, and the percentage of profit is 46.25%. Okay, this is the final answer, profit after tax. So this is the format for computing the common size income statement. First we put the net sales, after that less cost of goods sold from it, then we will get the gross profit, and if you have any operating expenses, just deduct the expenses from gross profit, then you will get the operating expenses, and total the operating expenses and deduct the operating expenses from the gross profit, then you will get the operating profit. And if you have any non-operating income, just add it, and if you have any non-operating expenses like interest or dividend, just deduct it, then you will get the profit before tax amount, and the tax amount is already given in this question, so deduct the tax amount from the profit, then you will get the profit after tax. Okay, this is the common format for preparing common size statement, income statement. Okay, yeah. Thank you.